While much of the crypto market is going down, one altcoin is rallying 25% in the last day, and Justin Sun adds $240 million to a new protocol. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin keeps pushing for a bullish end to February as the monthly close starts another week's price action. Analysts are eyeing a breakout towards 30,000 if support can become more permanent, but concerns remain that a trip back towards resistance reclaimed in January is still in the cards. Crypto lawyers have rebuffed comments made by the head of the United States securities regulator, who claimed in a recent interview that every cryptocurrency except Bitcoin is a security that falls under its jurisdiction. In a February 23rd New York Magazine interview discussing crypto, Securities and Exchange Commission Chair Gary Gensler claimed that everything other than Bitcoin falls under the agency's remit. He added that other crypto projects are securities because there's a group in the middle and the public is anticipating profits based on that group, which he said is not the case with Bitcoin. Jake Jervinsky, a lawyer and policy lead at the crypto advocacy group, the Blockchain Association, argued in a tweet on February 26th that Gensler's opinion is not the law, despite his claimed command over the crypto sector. He added, until and unless the SEC proves its case in court for its jurisdiction over each individual token one at a time, then it lacks authority to regulate any of them. Lawyer Logan Bollinger also chimed in, saying that Gensler's opinions on what is or isn't a security are not legally dispositive, meaning it's not the final legal decision. Judges, not SEC chairs, ultimately determine what the laws mean and how it applies. Meanwhile, Gabriel Shapiro, the general counsel at investment firm Delphi Labs, outlined in a series of tweets the seemingly impossible enforcement that the SEC would have to carry out on the industry to cement its rule. Shapiro said that over 12,000 tokens worth around $663 billion, according to Gensler, are unregistered securities that are illegal in the US. And as mentioned by Stravinsky, the agency would have to file a lawsuit against each token creator. My question to you guys today, is there any altcoin you're willing to hold for 10 years? If you had to choose from ADA, Matic, Solana, or ETH, which one would it be? Let me know in the comments down below and I'll share my favorite ones tomorrow. Operators on the Solana Network rushed to help the struggling blockchain early on Saturday after a tech issue throttled users' ability to trade crypto, transfer assets, or do anything on-chain. The blockchain started forking its transactions around 12:53 a.m. according to Solana's Discord server. Shortly after that, validators' RAM began increasing while the chain's transaction throughput fell off a cliff. Those tech troubles effectively froze nearly all on-chain activity on the Solana network. The network was processing about 93 transactions per second, well below the 5,000 15 minutes prior. This led validators to downgrade their version to 1.13 to restore transactions in the network. The downgrade, however, was not enough to restore Solana to normal operations, forcing the decision to restart the network on version 1.13.16. The Solana network is currently restarting, with 80% of its active validators online, necessary to resume operations. As more validators complete their restart, this number will rise in line with the amount they have staked. This means large validators, such as centralized exchanges, have an outsized impact on the restart times. Within hours, a majority of validators had switched back to the old software in their attempt to restore Solana's operations, but it did little to solve the still unknown problem that was weighing down the performance. The effort then turned into a more drastic solution, restarting the chain to the point immediately before the forking. Solana has been having a rough year. What do you guys think? Is there still hope for Solana? Ethereum plans to launch a new testnet named Holly later this year. Ethereum core developers plan to transition from the old testnets to new testnets and solve the ETH supply issues. The testnet will be the first long-standing merge from Genesis public Ethereum testnet. Ethereum core developer Tim Bygo, in a tweet on February 24th, announced that the team plans to launch the Holly testnet near September 15th, 2023. The plan to launch a new testnet has been in the process since the merge upgrade last September. He said old testnets end up being a problem for clients and node operators because it takes more time and space to sync. Before the Holly testnet launch, Ethereum developers plan to get application developers easy access to testnet ETH. Testnets help three distinct groups of users: client developers, application developers, and node operators or stakers. However, the needs of each group are quite diverse. Tron founder Justin Sun has also staked millions in Ethereum on a liquid staking platform, Lido Finance, ahead of the most awaited Ethereum Shanghai upgrade this March. On-chain data platform LookOnChain revealed that an address marked as Justin Sun staked 150,000 ETH worth over $250 million on Lido. Large amounts of ETH staked to liquid staking Lido by Justin Sun is a no-brainer, as it clearly indicates that Justin Sun is bullish on the Ethereum Shanghai upgrade and wants to utilize the opportunity. In fact, Ethereum staking continues to rise as the Shanghai upgrade comes near. Lido, which controls over 75% of the liquid staking market, offers an annualized percentage return of 4.8% on staked Ether. Liquid staking is expected to grow even further because of the ETH staking ratio, which measures the percentage of the cryptocurrency's supply staked. Ethereum's is significantly lower than other layer 1s. Only 14% of ETH is currently being staked versus 58%, the average for other layer 1 coins. Binance Research recently voiced an opinion forecasting more inflow of money into staking protocols after the Shanghai upgrade. It could be argued that many groups of individuals have been waiting for Shanghai to stake their ETH, as withdrawals will remove the liquidity risk and uncertainty of previously undefined lockup periods. The Avalanche ecosystem has recorded significant growth since the start of 2023. One reason behind the surge could be the rise in the number of new contracts. According to Dune Analytics, there was a 30% monthly growth in new contracts in January, while February saw a 75% jump in the number of new contracts. Since the beginning of the year, Avalanche has had high-profile partnerships to boost its network appeal. In January, it joined with Amazon AWS to promote the usage of the blockchain technology for enterprises and government agencies. Earlier this week, it took an enormous leap in the GameFi landscape after announcing the collaboration with Indian streaming platform Loco to launch an NFT gaming marketplace. These high-value deals led to a surge in Avalanche's social metrics, as mentions and engagement on social platforms increased by 16% over the past week. And China's Web3 community is rallying around the news of Tencent's march into the decentralized land. On Wednesday, the social and gaming giant held its first global Web3 summit in Singapore, where it was announced that Tencent Cloud is partnering with a few other popular Web3 infrastructure builders, including Avalanche. The Stacks token has doubled in 2 weeks on the back of strong growth for Bitcoin-based non-fungible tokens. Prominent crypto investing funds are also turning to the Stacks network as they bet on the growth of Bitcoin. Stacks is a layer 2 companion chain for the smart contracts focused on Bitcoin. Stacks token has jumped 25% in the past 24 hours, adding to a 50% surge over 7 days. Demand for the token has increased since the arrival of the Ordinals protocol, which went live on January 21st and allows users to inscribe references to digital art into small transactions on the Bitcoin blockchain. The token's market cap topped $1.2 billion as of today. A recently published investment thesis by North Rock Digital highlighted Stacks' focus on decentralized finance, the innovative use of smart contracts, and its compatibility with Bitcoin as attributes that set it apart from other blockchain projects. North Rock Digital founder Hall Press said, "We believe there's a massive and relatively untapped market opportunity and a huge cultural inflection point in the community sparked by Ordinals, and a transformative Stacks upgrade is coming later this year." A Stacks upgrade scheduled for March 20th may have also contributed to the recent growth of Stacks. One of the main features is the introduction of Stacking 2.0, an updated version of the Stacks consensus mechanism. Stacking is a process in which Stacks token holders can lock up their tokens to help secure the network and earn rewards. The HBAR distribution report, which is published on a quarterly basis, outlines that the network is set to unlock 6.28% of its total supply on March 1st, which comes to a total of 3.1 billion HBAR tokens. Taking into account the price of HBAR right now, this would result in a distribution of tokens valued at around $238 million. Tokens pertaining to purchase agreements, network governance, and operations are anticipated to consume 0.6% and 1.1% of the unlock. Additionally, the unlocking event will include tokens addressed to the ecosystem and open source development program, which makes up approximately 4.5% of the unlock. The total circulating supply of Hedera is somewhere around 25 billion. From this, approximately 50% of the total supply has been made available, while just over 49% of the tokens remain locked. However, it is important to note that following this unlock, subsequent token release events will not be nearly as significant and will only result in minor additions to the available token supply. Considering that Hedera has experienced such token unlocks over the course of the previous couple years, the level of selling pressure to some extent has decreased. Although there is always a risk of a negative effect on the price of the token during an unlock, a catastrophic occurrence is less likely to take place now. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.